Investors have both central banks of Japan and the US to thank for fueling last week's rally, which lifted stocks back towards record highs. Despite dissent resulting from the FOMC meeting, investors seem to interpret that the next interest rate increase is most likely to occur in December rather than November. The dollar weakened, bolstering appetite for emerging market assets, and helped commodity prices gain. Investors might feel that this cycle has the potential to strengthen the rally if the message on monetary policy remains lower for longer. Stock markets around the world did pretty well last week, despite the fact that September has typically been one of the worst months of the year for equity returns. According to MKM Partners technical analyst Jonathan Krinsky, stocks have fallen in the fourth week of September for 22 of the last 26 years. And he says stocks have fallen 72% of the time in the same week since 1980. Several market indices reached record highs, including the Nasdaq Composite, while the small-cap Russell 2000 index put in a 52-week high. The S&P 500 index came within 0.6% of its own record high. This week begins with the first of 3 presidential debates at Hofstra University in Hempstead, New York. For now, investors have no idea how a Trump victory in November might affect the stock market. With the next batch of earnings not due for a further 3 weeks, investors will have to rely on secondary economic data reports this week. The Market Purchasing Managers Survey for the service sector is expected to show a slightly lesser pace of expansion Tuesday, while durable goods data for August is expected to show a 1.4% decline, following a hefty 4.4% pace of expansion a month earlier. Economists surveyed by Bloomberg predict capital goods orders, measuring capital and investment spending amongst businesses, to stand still. We also get the third and final reading of second quarter GDP, which is expected to show that the economy expanded at a 1.3% annual pace, marking a slight improvement on earlier reports. The first of 2 readings on the health of the consumer is due Tuesday, with the Conference Board's Consumer Confidence reading for September. There, it's projected to dip from 101.1 to 98.8. However, the University of Michigan sentiment gauge due Friday is predicted to rise from 89.8 to 90. Finally, on Friday, the Chicago Purchasing Managers Index is expected to increase marginally from 51.5 to 52. Remember there, readings above 50 indicate expansion. That's all from IB Traders Insight for now. For more market color from all of our contributors, see us online at ibkr.com/ti. Hello, thanks for checking out our YouTube channel. Subscribe by clicking the button below. And over here, check out the latest short videos, market color, and digital exclusives.